Hi guys, how's everyone doing? It's Friday and I'm looking forward to the weekend and I hope you too. Right, this is my fourth video today and for those of you who are not familiar, my name is Desmond from Trading and Investment and I'm based in Singapore. Right, I have created three videos thus far and you can find them all on the YouTube. Okay, the link is right here, right above that I'm showing you. Okay, for today, I'm going to use the trend line analysis to analyze one particular stock called Meituan. Right, this is a Chinese company based in China. Right, a Chinese company based in China that deals primarily in the food delivery because they're one of the largest, in fact, in China. Okay, we're going to look at that. And thereafter, I'm going to also analyze a one currency pair. Okay, right. With this, let's move on. Now, first thing first is to open up this chart. As you can see, right, Meituan is the stock code is 3690, and I'm using the weekly view, right, the weekly chart view to guide me. All right. So here we can see that I've indicated in the blue line here, right? 69 is the IPO price. So when it was first launched sometime in September 2018, that was about 1 over years ago, right? The price actually came down, right? Fallen quite a fair bit from the IPO price, okay? And then it starts to rebound back, okay? Meeting its what we call the IPO price again, okay, before it before it break out from it, okay. So in the price action strategy, there's this particular pattern we call the cup and handle pattern. Well, let's see, this look like a cup here, right, with a right handle. So this is a small little handle. So how do you buy this particular counter? Is quite straightforward. Okay, let me just make it bigger so you can see, right? When the price start to break out from the right handle here, this particular green candle on the 12th of August 2019. You can buy at this particular candle. If not, you wait. You can also buy it from here, this particular candle here on the 19th of August. Okay, so that's one. Another way to buy will be to wait for the resistance, which is this blue line here, right? So once you break out of the resistance, as you can see, let's take a closer look. Yeah. Oops, my apologies. Okay. Once it break out, you can see there is a gap up here, right? There's a very nice gap up here, followed by a 3 candles pullback. Okay, so that's why I often say do not buy on breakout. So if you buy here, fortunately the damage is not much. All right, so you bought about 69.8, okay, before it gap up, so you have made the immediate profit of difference between this 69.8 to 76.8. But then it pull back, right, to this candle on the 9th of September, as you can see. So that is where you can enter here, okay. And had you bought it in 9th of September 2019, wow, you would have enjoyed this returns here. Let's take a quick look. What is the return over here? We're talking about 67.46%, right? 67.46% over a period of October, November, December, January, February. Wow, that's a 5 months period. Way much better than what you would have invested in the S&P 500 index, okay? But for those who have not heard of this company and would like to give this company a shot, okay, there is one article here which I just put out from businessinsider.sg. This is quite recent, in February 18, 2020, okay, 2020. So you can just read here, right? They have about 5.9 million partner retailers. Wow. And 700,000 daily active couriers, right? 700,000 daily couriers. That is a lot. Yeah, that is a lot. Okay. And what else does it say? Okay, let's see. Okay. Major delivery provider in China with 6 million partner retailers, including global chains like McDonald's and Pizza Hut. Now, McDonald's and Pizza Hut, we know they are franchised in many countries. They're being franchised in many countries. And a country like China, there will be I have no idea how many thousands of outlets there are. So there'll be a lot of people, youngsters, millennials, whoever who like fast food, they'll be ordering from this. So Meituan is actually a third-party food delivery company provider for these two big fast food company, right? Okay, so with the coronavirus event ongoing, how does a company like Meituan turn around its business model? Right, in the past, they would have their courier guys delivering the food to the doorstep. So there is this human-to-human interaction, right? But now with this virus madness that's ongoing, and people are so afraid of coming in contact with another human for fear that they might get infected. So Meituan actually has this what they term it as the contactless, right? Contactless delivery, meaning at the request of the customer, right? They will deliver the food items at the designated place that the clients wants, and then they will call the customer. Hello, Mr. Desmond, your food is already delivered to this particular location. Please go and pick it up. Wow, I think that is very, very nice, isn't it? And you can see they are the market leader in this business, so much so that major delivery out providers like L.me, which is the food delivery arm of Alibaba, and KFC, right? KFC are also following what they are doing. Okay, following what they are doing. All right. So the rest you can basically read over here. Okay, let's go back to the chart. So once I've ascertained the weekly outlook already, that is very bullish, I go back to my daily chart. Okay, my daily chart. Okay. So let's take a quick look, right? The first breakout of handle is actually a first buying opportunity, right? First buying opportunity. Okay, for those who did not get it, there is a second opportunity where price breakout of resistance, right? Breakout of resistance and retrace. So like I say, here is the second best place to buy. But what about those people, who have not heard of this company and now that I'm sharing it, or perhaps at a much later stage, you do your research and you discover about this company, where is your buying opportunity then? As you can see here, right? Each time the price break out from here, you see break out from this trend line here, the trend line here, very straightforward, right? Breakout, okay, you can buy here, all right? Buy here with your stop loss here. See, it's still not hit. Let me do a quick check for you, okay? You buy here, the stop loss is here. This is your gap here, okay? Breakout, you buy over here, pump, two nice candle, okay? And then if it retrace, but it went down even much further, but it did not touch your stop loss, right? So there you go, okay? Continue to enjoy the ride up. Okay, there's a third entry here. There's another fourth entry here. Okay, same thing. It break out and then retrace over here, and then it went up again, and then it's kind of slow down over here. Look at this candle here, the green candle here, still resting nicely on the green bullish trend line, and then it break out. Okay, it break out, and then there's a nice green candle. This is what we call the bullish engulfing candle. Engulfing means it cover up this red candle here. Okay, right? So You can actually buy here, or you wait for the retracement here again, right? The retracement is here. So that's where you go get in to buy a red candle. Now, okay, and then let's talk about the most recent one. Let me get rid of these two orange lines. Okay, and then the price fell through the bullish trend line. Okay, and then it retraces back. Okay, open here, it closed back here. So this candle, you will not know what to do because it actually went back in, but it is risky to buy because it has actually break down, right, quite forcefully. As you can see, the length of the red candle, it falls through the bullish trend line, and then it retraces back. Okay, if had there been another green candle here, for example, then that would prompt a buying opportunity, but it did not. In fact, it actually plunged down lower. Wow, boom, come down. Okay, and now what is it doing? Let's take a quick look. Now it is consolidating between from 96.9, okay, to 103.9. So it is now at this is what I call the ding dong session, right? The consolidation period here. So this is another good opportunity for those who wish to get in, and I myself will be buying as well. Okay, so let's zoom down further to the 4 hours for a more precise. 4 hours is usually the the time frame that I use to get into my buying or my selling entry. Yeah, so that's fairly good enough. As you can see, right? This orange line here is the maybe I can change the color so that you can be clearer. Blue line, okay, which is very good at $100, right? $100 here you can see is the a support, right? Each time it comes down here, it went up, plunge down, it goes up, plunge down, it goes up. Okay, so here you can see that it break down and then come back, break down and then go back up again, right? Let's take a look here, which is the most recent candles in the month of February. Is what you want to look at. So you can see, right? Breakout from here, okay? Okay. How do you determine that it's time to buy? Okay, this is the let me draw this here. Okay, the red line here is the bearish trend line. All right, the bearish trend line. Okay, here. All right, is the first breakout from the bearish trend line. Okay, so you might buy it here. So you might probably buy in this candle, but depending on where is your stop loss. Okay, where's your stop loss? If your stop loss is here, this black line here, then you are likely to be taken up by this red candle already. But if your stop loss is much wider, which I usually advocate because in stocks especially, I'm more of a long-term investor rather than going in and out of the market like in forex or in other products like futures, right? So for those products, I might have a shorter, tighter stop loss. But for shares, usually it will be much wider. Okay, so in this case, depending, okay, you might be stopped out from here. Then a second opportunity come again, right? Here you can see open here, it closed outside of the bearish red trend line, okay, and then it went up here. So this is your good buying opportunity, 11th of February, okay, and then it moved up very nice out of this resistance, the blue line, the resistance, okay, and then now it is going sideways here. Okay, so if you are considering to get into this stock, where would your entry be? Okay, I would say wait for the price to break out from here. That means it break out, okay, break out, and then it retrace to this orange line here. Okay, this is difficult. Let me just do that again. Okay. the price will go something like that. Okay, break out from here, come down to here, and then it go up again. Okay, there's one particular thing that one particular area that I would like you to focus is here. If you look closely at the candle here, did you see a gap? Right? Okay. Okay. Which means that when the price break down from the bullish trend line, it actually has a gap down, right? It has a gap down, a strong sell here, right? A strong sell here. So this gap, I believe, will be closed sooner than later, right? We do not know. So this consolidation can go on for a long time, as I've said, so I really don't know. So one has to be really patient, right? If you see from here, we are starting in mid-January. Now we are also coming to mid of Feb. So there's about a month's time, right? In 1 month's time, the price has not really been moving much. So it's hovering around this area, okay? Moving around this area. So let's wait for the price to break out from this orange line, which is 103.9. And then retrace nicely, okay, over here. Make sure it's a bullish candle, right? Before you initiate your buy, and then ride the trend all the way up. Okay, ride the trend all the way up. Okay, I'm bullish on this counter, and I will be looking for opportunities to get in every now and then. It presents to me. So I will not be going in and out like I mentioned in forex and other things. Okay, so I hope this has been useful for you guys. The stock code is 3690. Okay, Meituan-W. Okay, but for those I think who are not able to buy in the Hong Kong or China stocks per se, I think, let me just do a quick check if I'm not wrong. This is also available in the US market. I have no idea what is the two difference, one with MPNGY and one with MMPGY. Okay, let's take a quick look. Okay, yep, I think it looks the same, 13.08, right? 26.7. Okay, so you guys might want to go and find out what's the difference, but basically that this is a good opportunity. Okay, now the next one I want to bring your attention to is the US dollar versus the Singapore dollar. Now, Singapore dollar, Singapore Sing currency is what I term it, is the currency that I will be using on a daily basis since I'm based here, right? So for buying of groceries, paying for my kids' education, so on and so forth, taking transportation, I need to use the Sing currency. Okay, so this chart here would be very useful for me, right? In that sense. Okay, so on a daily basis, on a day chart time frame, I apologize, day chart time frame, you can see the price has came down, okay, between these, I call the support or the buy zone at about 1.345 to about 1.351, okay. You can see from the historical pattern, once it touches to this level, it bounced up, okay, it rebounded, and then it came down again, it rebounded, and then came down again, and then it goes up nicely, okay, not for long, and then it came back down again this time, okay, right, with a new so-called new support at 1.351, and then it goes up very nicely all the way to 1.39, which is almost the peak already, right? That was in September 2019, and then wow, and then Sing dollar gets strong, and then it flash all the way to the year 2020. You can see 2nd of January, right? 2nd of January, I said USD, the global currency, offer discount now. Start to long, all right? Meaning we can start to look for an opportunity somewhere here to buy this buy this pair. So let's take a quick look. How does it perform thus far? very beautifully, I would say one of the most beautiful chart and one of the a very profitable trade thus far, right? You see, it did not really okay, let's make it bigger. I apologize. It did not really pierce through, right? The green part here is where after I've shown the trade setup, right? It hovers around here for a while, as I've said, right? So it's somewhere in December all the way to January, so it's about less than a month. It break out beautifully, okay, of the bearish trend line, here, okay, and then there is the so-called slight small pullback here where you can buy this pair, and as the saying goes, like the rest is history, and it goes all the way up, right, touching the peak of 1.4. All right, now I'm going to go to this pair, and let's take a let me just delete all this so that you can be very clear. Okay, what happened to those who are already in, right, in early Jan, and what about those who are not in yet? What can you do? Okay, let's analyze this, examine this on a smaller time frame. So I'll be using the 4 hour. Okay, so we already know that sorry, let's go back to the day first. We already know that the day time frame is very bullish, right? Always use green so that you do not confuse yourself. Okay, if you have too many colors, of course this is individual preference, right? If you like it, then that's okay, but if not, it can be very confusing for yourself. Okay, so first thing first, I will draw the trend line up here to tell me that this is a nice bullish trend. Okay, another one, of course, is we determine that how it has broken out from the bearish trend line in red. Okay, now do not be overly concerned about the top and the bottom. Does it touch nicely, neatly? You know, sometimes I might just have something like that. I think it's perfectly fine whether with the what they call the tail or of the candle, the spikes of the candle are coming out a little bit. I think that is okay, because the whole idea is not to pinpoint the price point, but to give you a overall idea of where is the price that is going to break out from it. Right, from here, one look is very obvious. We can see that this green candle on 27th of January is the breakout candle. All right, so it has suffered from 2nd September all the way to January, a good 3 months. 3 months that is going down, right? And now it is going up very nicely. Okay, so that's what we need to do for the day time frame. We move into the smaller time frame here. We can now take out the red trend line here so that you have less lines to look at, because you already know that it is riding on the bull trend, right? So this is what I'll do. Okay, now you will notice that when you draw the trend line on the day chart and then you zoom in to look at the 4 hour or to look at the 1 hour time frame, the trend line may run a little bit. So that is where I will do my little adjustment here. Okay, the next thing I'll do is, let me make it bigger for you guys. Next thing I'll do is I will draw a second, I call it the inner trend line or the inner bullish trend line, whatever you want to term it as. Okay, so this will go something like that. Okay, here again it has to be green, right? But instead of the same color, I will use this dotted line so that I know it's an inner trend line. Why do I do that? Okay, let me explain, right? Let me explain clearer to you guys. Okay, so okay, the price is moving nicely up. Okay, moving up. Now you can see this is a warning sign already, right? This is a warning sign. Okay, this candle moving up all the way, hitting the peak of 1.40, and then you can see the sellers, right? You can see the sellers is pushing the price down. Okay, sellers come pushing the price down. Okay, so that's what the sellers are doing. So this candle can be a warning sign for us. And you can see the subsequent candles are getting shorter and shorter. And now we already are facing the bearish candle already. Okay, so your analysis should be quite straightforward in a sense. How will the price move from here? Okay, this is again based on probability, so that is not a certainty, right? There is a possibility that the price might retrace to here, okay, move down to here before it continue to go back up, okay. Try to use the color, the red and the green, to denote that red is going down and green is going up. I mean, of course, this is up to you. If you are comfortable or with other colors, or you want to use other of the side icons here, please feel free. For me, I've been using this for a while. So after a while, I'm quite familiar. So, you know, so there's no rush. Yeah, that's what I'm trying to say, right? In plotting the chart, be patient about it. Don't rush. Get the your logic and your rationale right first. I think that is more important. Because like I say, buying and selling is very easy. Yeah, even a 3-year-old kid can do that just by a click of a mouse. In less than 1-2 seconds, you're already in the position, right? But it's the before aspect of it that you want to be clear, right? So this is one possible scenario, right? It comes down to this inner trend line here. If it's still strong, if buyers are still present in the market, then you will see the price continue to go up from here. Okay, price will continue to go up from here. Otherwise, okay, if the what they call sellers are coming in aggressively, then it can, after hitting down here, it can also fall back down. How far? It all depends. Okay, it all depends. Okay, the ultimate, of course, will be breaking of this trend line, right? Breaking of this trend line. That is what you want to avoid. So let's tackle this on a what position you are holding basis. Okay. Oops, sorry. Let me take this out again. And this up. Okay, if you had bought it like I do somewhere here, which is in January when it break out from the bearish trend line, then you want to consider taking profit, right? So in taking profit, I've said I do not base on the strictly the risk reward basis, because if you base on the risk reward basis, then I can tell you have already made quite a good sum of money, assuming you bought it at here 1.35, just as an example, and your stop loss will be anywhere here, right? Or even here, right below this line here. Okay, so this is your, let's see, buy. Wow, this is so big. Okay, this is where you buy, right? Your stop loss is here. Okay, and if I were to use a graphical method so that you can see it much clearer, right? So pink color is not good. Let's use a stronger color. How about black? No. Okay, this color is okay. Okay, blonde. Okay. Okay. Right. Just by using this, which was what I did in the past. Okay, please be patient with me over here. Okay. 2, and then 3. So stack up this, right? Okay, so just estimate from here: 4, 5, 6, 7, 8, easily, right? So this would basically tell you, right? Want, and then here you have your 2 should be here, 1 should be here, right? So you can see you're risking one of these cube, which is your risk, or where your maximum stop loss is going to be, and you're going to gain here. So even if you were to exit your position here, you already are making 2 times profit, right? You are getting 2 times of your reward in exchange for 1 time of your risk, right? Okay, so this is quite straightforward. Okay. Okay, let me take out this line. Right, so here we estimate you probably you have made about 8 times of your risk already, right? You can consider, that's what I did, right? I'll take out, let's say I have 2 contracts, I will exit, or I will sell 0.5 or up to 1 contract. Okay, I will sell 1 contract and leave the remaining to run, right? Leave the remaining to run, meaning I will let the price continue to go higher and higher and higher. Okay, because why? As I've said, I do not want to predict what is going to happen, because there are so many scenarios that can happen. It can fall down, it can come down to here, the inner trend line, and continue to go up, or no, it can come down all the way here. Okay, worse, it touch here before it continue to go up, or it can break down from here and then do what I call a false breakout, to trick the early sellers before it rebound and come back in again. You see, just a simple chart like this, there can be so many scenarios. Or it can also go something like this, right? From here, it can go like this, right? A consolidation before it go up or before it come down again. So many scenarios. So why spend time trying to analyze how the price action is going to behave in the future? That's not my job. My job is basically to follow where the price action goes, and I have to then determine what to do. Okay, so take partial profit, let the remaining run until this price action start to consolidate anywhere here, or you break down from this bullish trend line before I exit my position totally, because I could have earned much higher profit, right? Because I've already taken 50%, right? Or 25%, whatever it is you're comfortable with, and I let the remaining run. So if the remaining it run further up, I would be able to compensate for taking the first half position out from the market in that sense. Okay, very simple. Now, what happened to those of you who have not entered this and you want to consider? Is there still a buying opportunity? Okay, do not look at the 4 hour, as I've said, because then you need to go back to the daily or the weekly in that sense. Okay, let's again take out everything, and then okay, right. This is the weekly chart, which already tells you the peak is somewhere at 1.45. So is there a possibility for the price here to continue and go up? There is definitely a possibility, but nobody can tell for sure, right? Nobody can tell for sure. Okay, but one thing we already know is from here, if you were to draw a trend line, right? Just draw a trend line down here nicely. Okay. Draw the red trend line nicely. Okay, so that you don't have the arrow, right? So here already tells you, right? Here already tells you that the price action has broken out from the bearish trend line, right? Which supports what I earlier said on the day chart as well as on the 4-hour chart. So there is a possibility of it, right, moving higher and going to touch this 1.45, but before it touches there is a high possibility that it will retrace. It has to retrace at some point, right? Look at the week chart. 1, 2, 3, 4, 5, which means over the last 5 weeks, right? 5 weeks, this pair has been moving in a bullish direction, right? So that is not very healthy, right? 5 strong weeks, it is behaving in a very bullish mode, right? It has to retrace somewhere, right? So if it is going to retrace something like that, for example, okay, oops, sorry, right? So it might form anywhere here, and the price might move, okay, here, 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 okay. So this is what we term as a bullish pendant in that sense before it break out from here. So I will wait patiently for the price to break out from here. Okay, retrace, and then that will be my next buying opportunity somewhere here. Okay, but as I say, this is a projection that I'm making. How the candles will behave, nobody knows, right? It can be much wider here or much lower here in that sense. So then this arrow that I'm drawing will not be accurate in that sense. So no point wasting your time, spending your time trying to you know, do all this projection. I know it can be quite fun, and it is I mean a good, you know, make someone happy if you can get the direction right. But as I say, in trend analysis, more important is to follow where the market is telling you, right? Follow where the market is telling you. So as in this case, there's no need to hurry, right? There's no need to hurry. If you have not got into this pair, okay, there are still many pairs to look at. This is just one, okay? That how I use the trend line and make very good, you know, risk return ratio in that sense. Okay, I hope this has been helpful, and you guys have learned something from it. Until the next video, all right, take care and have a very good weekend. God bless you guys. Bye bye.